After I called in video, the number one question I got for 18 months is, what's the next NVIDIA? That's not my question for you, but
Same.
when you're looking at the new sector or new company, what's your process to do the research to find what sector could be the one that takes off next?
All right. So we have this list that we keep internally called the best stocks in the market. And what we're looking for are the stocks that are working right now. And it's not that we don't care about the fundamentals, of course, like everybody does. So we're looking for profitable companies. They've got to be a certain size. It's not that there aren't small good stocks to own. It's just this is not what we're doing right with this particular effort. So they've got to be a certain size. They've got to be profitable. And we want to see the distance from a 52-week high. We want to see whether or not they're in a defined uptrend, not like my opinion, but like mathematically, is a stock trending higher over a certain period of time? And we're looking at all these things and we come up with a list of what are currently the best stocks in the market. Now, I can't say these will be the best stocks in the market for the rest of the year because things change. So all we can really do is take a snapshot of this moment in time. Where are people making money right now? For me, that's not the end of the process. That's the beginning. This is the number one problem that people have when they get into the stock market. They don't know where to begin. So they turn on TV. Maybe they see me. Maybe they're not so lucky. They see somebody else. But whatever ticker symbols are being talked about that day on the air, like they think those are the stocks they're supposed to trade. There's no context. So what we do with best stocks to market list, it's to say, all right, if you're going to go fishing and you want to catch something, shouldn't you start in a pond that you know is stocked with fish? It's the problem with people is it's not their fault. Nobody teaches anybody this. Why would you start with a random list of stocks that people were talking about on TV or in a magazine that day, or people on Twitter? Like that's your starting point. So I'm starting with the best stocks in the market. They're profitable. They're big. They're going higher. They're in uptrends. They're in proximity to a 52-week high. They're in the S&P 500. The best. Every week, every Friday, I look at the close. I don't want to get whipsawed every day, Monday, Tuesday, Wednesday, because the list changes. Stocks fall in, stocks fall back on. If I look every week, 52 times a year on Friday, market closes. Okay, what are the best stocks this week? That's a great starting point for me to spend that weekend, not for a million hours, just like, oh, I never heard of this. Let me find out why it's going up. Think about how many people have the opposite approach. They're looking at the 52-week low list. That's a really tough way to make a living. They look at the worst stocks, or what are the stocks that are the most controversial and they're being talked about all day. That's not a great starting point either, right? That's how you end up owning Boeing. So what I'm trying to, or Intel, what I'm trying to do is identify those best stocks and then use that as a jumping off point to try to figure out what's going on. And I'll tell you guys a couple things. The first is, let's say the list has 65 names on it on a random Friday. It could be 10 names. It could be 100. This is a function of how the stocks themselves are behaving. Let's say 65 names. If 10 of those 65 names are all consumer staples, there's a lot of information in there. Number one, it tells me defensive names are rallying more than most of the market. Number two, I might stumble upon a company within that sector that people are excited about, and I might learn that catalyst for myself and have a new trade. So that's my starting point. I'm not saying there aren't other ways to do this. I'm saying this is what I know works for me. Here's what I'm saying definitively that I'm not doing. I'm not looking for the cheapest stocks. I'm not looking for what are the lowest valuations. That's just that there are people that play that game and they're really good at it, and it's nothing wrong with it. I'm not doing that. I'm saying, where are investors being rewarded right now? Let me find out why, and then I got to figure out, can this continue? This is how I ended up in the trade desk this year, TTD. Yep. Sick chart. This is how I ended up in Reddit, one of the best performing recent IPOs.
Yes.
All of these things, I wasn't focused on them until my list said, Josh, look at this stock, find out what's going on here. And so that's my approach to investing. And look, it's taken me, I don't know, 15, 16 years to, figure that part out to the extent that I have. But I've been doing that for the last few years. And I don't want to go back to any other version of what I was doing now that I'm doing it this way.
So before we leave, I got to ask you about everything that you just said. Just going to throw it out the window, and we're going to ride the hype train. MicroStrategy. MicroStrategy. We're going to talk about MicroStrategy, right? Oh, respectfully. So, Michael Saylor.
Oh, you guys like it? You guys like MicroStrategy or no? Is there a consensus?
Here's the thing. I think that MicroStrategy is at least for now tied to Bitcoin's success, and I think Bitcoin is going to have a successful year. That's just my personal opinion. So I put an option call on MicroStrategy last week because it was down like 30%. Once again, not what you would recommend, highly unrecommendable in this whole scenario, but it's an interesting case study. So it was down 30%. Yeah. So I'm like, I think this is a good buy. And then it went down another 20%. And so I was down 40% on my option call.
On the call. Okay.
Friday. And, just learning math, like when I became a financial advisor, I realized that if you have like $100, right, and you drop to 50, that's a 50% loss, right? But it's going to take 100% gain to get back up to $100, right? Because a 50% gain on that only gets you to $75.
Mm-hmm. Yeah.
So I'm like, all right, I'm down 40%. This is pretty heavy. And
so you want to know, should you sell the call?
Well, no, I bought more.
Okay. Oh, you did. All right.
I doubled down on the call.
I didn't know you were gully like that.
Unadvisable.
Highly unadvisable, highly unrecommendable.
Averaging down in options trades is, it takes a special.
Well, I'm praying for you.
Well, no, so I got to finish the story. So now, and I gained 80% in 2 days. So now I'm up. I gained 80% in 1 day, actually. So now I'm up 10%. Highly unrecommendable, but I just had a feeling. It's just an eye test.
Yeah.
So, okay. Right.
Can we tell the truth about Michael one day? It won't be today, but Josh.
So we have a saying on Wall Street that if you don't know who you are, the stock market is a really expensive place to find out. Rashad, what little I know about you is that you have nerves of steel. I know you're an Iceman. I know you've not. It's not just that you cultivate that persona on social media. I know that is what you really are. And I know that from your friends who, Rashad is different. Okay. Most people can't do what you are doing.
Unrecommendable. That's unrecommendable for sure.
Most people will lose their shit down 40%.
That's a fact.
So broadly speaking though, Mike, so I don't trade options. So I don't really have a comment on that strategy. Michael Saylor, I will tell anyone who wants to listen that I don't fully understand how these transactions work, or I understand how they work mechanically. I don't understand why they keep working. So effectively, what he's done, and it's brilliant. I don't know where it ends, but like right now, it's brilliant. What he's effectively done is he's found a way for people to lay off their volatility risk on him in exchange for dollars. So Bitcoin is inherently volatile, and he's basically saying, I will eat that volatility, and in exchange for your capital, I'll pay you an interest rate. So he's got big institutions. These are sophisticated buyers buying the debt that his company is issuing. As of last week, I think they just launched a perpetual preferred, which is a class of stock. It's not common stock. It's got capped upside, but it pays a yield as though it's a bond. And it's perpetual, meaning there's no maturity date. So it just lives forever, publicly traded. You could buy or sell it in the secondary market. So he's found buyers for instruments tied to his Bitcoin treasury, publicly traded security. And they keep buying it. And every time they buy more stock from him or more bonds from him, he gets capital. And of course it's dilutive what he's doing to the shareholders, but they don't care about the dilution. because he's taking that money and plowing it into Bitcoin.
Yeah.
And I think he has 500,000 Bitcoin now. I think he has
Yep.
450,000 Bitcoins.
He just passed BlackRock.
Okay. So it's extraordinary because you do have a lot of institutions that are looking for yield from non-traditional sources. Well, this definitely qualifies as non-traditional. And then you have a lot of people who want to have exposure, leveraged exposure to Bitcoin in their brokerage accounts. Here's where I truly can tell you I don't know anything. My assumption was that when the ETFs came out a year ago, there would be no more demand for MicroStrategy stock because now you could just buy BlackRock or any one of 11 publicly traded spot Bitcoin ETFs in your brokerage account. You don't need to buy MicroStrategy anymore. You don't need that exposure coming from a corporation that's hoarding Bitcoin.
The volatility.
I could not have been more wrong in that assumption. Look at what the stock price has done over the last year. It's now in the S&P 500. So I don't know anything. So I'm like you. I'm reading the news. I'm trying to like mentally understand what's going on. And I'm talking to people. I'm listening to other people talk. As it pertains to most things Bitcoin, I'm a student, not a teacher. I'm not ashamed to say that out loud. I know a lot of people are. And I'm still learning. I don't fully understand why people are willing to pay a premium for the value of the Bitcoin that MicroStrategy owns, but they are. Most of these types of vehicles end up with the price being a discount. So I come from the 1900s. I don't know if you know that about me. That's how long I'm doing it. Okay. I'm from the 1900s. We used to sell closed-end bond funds to investors, and those traded at a discount to the NAV 99% of the time.
Yeah.
We used to sell municipal bond closed-end funds. They traded at a discount to the value of the bonds themselves.
What was the volatility? Because I think that's what he's selling his thing as, is that Bitcoin is an extremely volatile asset, which is good if you want outsized returns. And his thing is it tracks Bitcoin, but it's even more volatile.
No, I get that. I still don't understand why it's trading at a premium. So Grayscale had the first publicly traded Bitcoin trust vehicle, but so GBTC, other than MicroStrategy and Riot blockchains and Mara, there was like no other way for traditional financial people in a brokerage account to get Bitcoin exposure. So they bought Grayscale, which was trading at first at a huge premium to the value of the Bitcoins it held in the trust. And then as Coinbase became more popular and Robinhood started trading crypto, people didn't need Grayscale's product anymore. So they sold it down to its NAV, and then it kept on going. It dropped through the NAV. And then there was one point where it was a 30% discount, which is when the hedge funds bought it up. And then when they got approval to convert to an ETF, it shot right back up to par value, or right back up to NAV. That was a brilliant trade.
You tell everyone what NAV is really quick if they don't know.
Net asset value. So literally, Ian, if you tell me my publicly traded company holds $100 million worth of Bitcoin, if your stock were to trade at that NAV, it would have a $100 million market cap, straight up. If it trades above that, it's a premium to the NAV. And if it trades below that, it's a discount to NAV. My point that I'm trying to make to you guys is that every product I've ever seen on Wall Street that looks like a closed-end fund where it just holds assets, but it has its own ticker symbol, every single one of them ends up trading at a discount to NAV. Somehow, MicroStrategy is at a massive 2 or 3x premium to its holdings. And I think that speaks to the army of people who just have so much belief in Michael Saylor's ability to continue to expand the strategy. And maybe they'll be right. I'm telling you, I'm a student, not a teacher, because I never would have seen that coming. And I still don't understand it to this day. So I'm fascinated by MicroStrategy and Michael Saylor, and I'm following it every bit as closely as you guys are. I just don't have anything anything worth saying about its future price because I already don't get it.
So safe to say you're not recommending it to the portfolios.
No, I don't own any MicroStrategy, but I own the S&P, so I guess I do, right? Indirectly.
Partially, yes.